Your latest note is basically titled OPEC here ticking multiple boxes. Can you explain what that means?
No, they got a lot of work done on Sunday. Saudi Arabia came out with another blockbuster cut, 1 million barrels a day, unilateral. Some would say, well, they couldn't get the band together for the cut, but the Saudis backwards with barrels. So the fact that Saudi is going alone, I think, gives credibility that the cut will actually happen. But we had the big baseline increase for the United Arab Emirates. Like, that is something they have wanted, they've pushed for since 2021. And so that is a big win for the UAE. They get this done before turning their attention to COP28. So you could say UAE was a big winner for the weekend. But you also had the African nations agreeing to take a reduction in their quotas. They are underperforming their quotas. They agreed to collectively take about a 600,000 barrel a day reduction for 2024. So a lot of work got accomplished on Sunday. It wasn't always easy. We weren't sure they were going to land the plane, but essentially, by the end, everyone is at the table, and they presented a unified message.
And the market reaction here also seems to vindicate that Saudi Arabia decision, because we've seen oil prices pop off the back. What do you think it means for market balances in the second half of the year, and ultimately the trajectory of prices from here?
One question that market participants will have is, they announced it as a 1 month cut. The question is, will they see through this, million barrel a day extra cut for a multi-month period? But obviously, people will be adding this to the potential deficits that we're going to see in terms of balances. So it is a materially significant announcement that the Saudis made.
Also coming out of this, big questions about Russia's future role as an oil producer. And this is interesting, right? Because Russia could also perhaps claim a win here. They've walked away. They don't have to change their production cuts. What does it mean for Russia long term, though? And is Russia's best days as an oil producer ahead of it?
I think that is the key question, because going into this meeting, there was so much talk about potential Saudi-Russia rift. They looked at Russia's increasing market share in Asia and said, will Saudi Arabia fight to get that market share back? But one of the things I think people miss is we see an increasing flow of Middle Eastern barrels to Europe. Russia has lost access to its most important market. So yes, it's pushing into Asia, but it's having to accept an incredible discount. There are significant sanctions headwinds facing the Russian energy sector over the medium term. So if you were Saudi Arabia, you could potentially look at this as a temporary loss of market share. And I think it's also important to remember, European countries feared a major energy crisis when they basically announced that embargo. The Saudis, the Emiratis, the Kuwaitis, they decided to send those barrels to Europe as an assist to those nations. So again, it is an active war request that they answered on the part of Europe.
Really good point on the battle for market share into Asia. But I have another question, and that is, how are the Americans going to react? What are you hearing about how the administration thinks about this?
Fantastic question, because we were here in October when the surprise 2 million barrel a day cut was announced.
Right.
The reaction was incredibly strong and incredibly negative from Washington. This time we're hearing the U.S.-Saudi relationship is so important. There has been such a sort of a reset and a refocus. Tony Blinken is going to the kingdom. And so I think the administration is basically saying, we can handle this cut. Look where prices are now. They don't anticipate a massive rally in retail gasoline prices. So they basically are willing to accept this decision, and I don't think it's going to cause any significant rift in the bilateral relationship.
Amrita Sen at Energy Aspects told me last hour that she now expects triple-digit oil by